Morning, guys. You can see time is around 8 o'clock. Let's look into yesterday's and today's Bitcoin trade analysis. Coming to an intra-day time frame, guys, where I have already mentioned to you. I would like to mention it once more. You look into an intraday bias, guys. You can see the market here swept this liquidity of these candles and closed below this 200 moving average, clearly signifying some sort of bearishness. And after that, the market, after sweeping and closing between these ranges, guys, you could have looked for this low to be taken, and you can see clearly market sweeping this low as well and showing the market closing between this range, clearly signifying some sort of bullishness. And the next target would have been this high over here, and but here we can see the market the next day took this high and closed within this range, clearly signifying some sort of bearishness. And the next target for that day would have been this target over here, and you can see this is an insider candle, and you can see clearly the market formed a bearish candle and took this low. And after taking this low, the market closed below this level. And for the next day, what you could have seen is to target this low. And you can see on this day, the market even took this low and even took even this low, guys, the previous swing low over here. You can see this is the previous swing low and closed within this range, clearly signifying some sort of bullishness. And for the next day, you could have looked for long trades over here, this target over here. But you can see this was an insider candle. And on the next day, the market came all the way, took this low over here and closed above this range. As you can see, this is the candle which we have targeted in the after sweeping this liquidity below. The market failed to sweep this low. Instead, the market swept this high because you can see the market already swept this low and closed between this range. And after this, you could have looked for this high after this kind of huge bullish candle. You can see this high, and you can see this was an insider candle. And the next day, the market swept this high and closed within this range. So after this day, guys, after the market sweeping this and closing between this range, you could have looked for this low. But instead, the market was trading on the upper limits of these levels, guys. You can see, if you consider this, the market didn't even retrace the 0.38 level, so clearly signifying bullishness, and even the 21 moving average. And the market sentiment was very bullish, even though the market closed above these levels and closed between these ranges. The market sentiment was bullish, but definitely the market closed above this range now, guys. So definitely we can consider the market to look for upper side itself. So after failing to sweep below this low, the market swept this high. You can see the market even swept this high, and here the market swept, and for the next day the market closed below this range, clearly signifying some sort of bearishness. So what you could have looked for is this low over here, this low to be swept. And let's look and zoom into this time frame. And the next day the market formed an insider candle, and here you can see the market had to sweep this low. Instead, the market swept this high and closed below this range. So you could have targeted this low over here. For the next day, you can see the market swept this low and closed below this range, clearly signifying some sort of bullishness. And for target levels, you could have targeted the next day to be these swing highs. You can see the market failed to sweep this low, but instead the market came all the way to this high. And here the market swept and closed below this range. So you could have looked for downside here. And here the market swept this low, rejection of price from 9s21 moving average, and closed below this range. And for the next target levels, you could have looked for this target over here, which I have already mentioned to you in previous videos, and the next target to be this. In this day, you can see the market sweeping this high and closing between this range. In case if the market closes below this range, guys, we'll look for down trade, or in case the market closes above this range, we'll look for long trades. The close of this candle is important, so I hope you're understanding how to analyze on a daily time frame analysis, guys, and which will help you to make a better decisions whether you should look for long position or short position. And I have already mentioned to you, after doing this rejection candle from lower levels, rejecting price from 9 as well as the Indian moving average from an intraday level, and price closing above this 200 moving average, clearly signifying bullishness, guys. So I told you to look for long trades only, so you can see this momentum towards the upside and even this momentum. This is about my intraday bias, guys. So let's look into a smaller time frame, in a 1 hour time frame, and see how the market here behaving. So here you can see the market here swept this low and closed above this range over here. You can see the market sweeping this low over here and this low as well, and sweeping below this range. Let's look into a 5 time frame and analyze how the market behaved on 21st of April. You can see this sweep of this low. So if you look into a daily time frames, I will mention to you how this looks like. You can see, guys, this low, this low, and this low, the market swept and closed below this range. So let's look into a time frame and see how here the market behaved in a smaller time frames. This trade which I have already mentioned to you guys, but let me explain to you further. After this kind of momentum, the market swept this low, and which is this low over here is in confluence with this demand zone over here, guys. You can see if you consider this demand over here, you can see the last down candle with the fair value gap over here, which broke the structure high. This acts as some sort of significance over here. You can see, and if you try to plot the fair value gap over here, the market came and mitigated exactly this fair value gap over here. So if you look into higher time frame, guys, this whole momentum you can consider it to be a single swing where the market changed the market sentiment from being bearish to bullish, and the market formed a chalk over here. And here the market mitigated this fair value gap, and again the market came all the way and mitigated this fair value gap. And after mitigating the higher time frames demand zone, guys, you can see the market clearly formed a chalk over here, clearly signifying some sort of bullishness. So this is a clear chalk, or you can consider the first market structure strip. And what you can see is to plot the swing low to swing high over here, and you could have marked the 50 levels where price is trying to take support over here. So this is the 50 level, guys. You can see price rejecting from these levels, and even there is a fair value gap here. So you could expect the market to come to this optimum trade entry, reject price from these levels, and continue further towards the upside. But you can see clearly the market here came all the way to this 50 levels, and this is the 50 level, and this is the fair value gap in a higher time frame, guys. So this is the fair value gap in a higher time frame. So after this, the market swept this low and clearly broke the structure high, clearly indicating some breakout structure. And if you try to plot the demand over here, you can see this is the demand, guys, and this is a 5-minute order block, and you can consider this to be a 1-minute fair value gap. So this is a fair value gap, and this is a 5-minute order block, and which is in confluence with the 50 levels, clearly signifying some sort of bullishness. And you can see here is that again the market headed high. In case if the market sentiment here were bit bullish, the market would have continued further after mitigating this fair value gap, rejecting price from this level. So you can see clearly the market came, mitigated this fair value gap. Once if this fair value gap has been mitigated, it doesn't hold any value. But what happened here is that the market clearly broke structure towards the upside here after mitigating this fair value gap, clearly indicating another break of structure. So with this break of structure, the market created an order block level here. And you can see the car market came and mitigated this order block and further formed a chalk over here, clearly signifying bullishness. So you can see how many confluences there are, guys, for you to consider. The first entry was here where the market came to this 50 levels and broke structure towards the upside. So after seeing when the price mitigating this fair value gap is where you could have entered long position and you could have targeted towards the upside. So in case if you might have entered your position somewhere here at 50 levels and your target levels would have been, so if you try to plot the fib extinction levels here, guys, so the high of this candle to the high of this candle to the high of this candle, you can see exactly the market rejected price from this 100% move over here. This is the 100% move, and keeping your stop loss just below this candle itself. And you could have targeted it all the way to this 100% move. This was the first entry where you could have taken long position after seeing some rejection of price on 50 levels. But you can see here the market again mitigated this fair value gap and broke structure towards the upside, leaving a fair value gap here, guys. You can see the market here left another fair value gap here. So the market mitigated this fair value gap but failed to make a chalk over here. Instead, the market again came and mitigated this 5-minute order block. You can see this is another 5-minute order block where the market came mitigated and formed a break of structure. So this is where you could have easily entered, or once the order block level has been reached, you could have entered long position here, keeping your stop loss just below the order block level itself, and you could have targeted towards the upside. And for target levels, if you try to plot the fib extinction levels here, the common point between this to the common point between this to the common point between this, you could have targeted the initial 100% move, the 1.68 level, the 2.6 level. You can see you could have easily targeted the 2.6 level over here. This is the 2.6 level where you could have targeted, and you could have trialed it all the way to this low. And after the market formed a chalk, the break of structure, you can plot the swing high to swing low, and you can see the market trading above the 50 levels only here, clearly signifying some sort of bullishness. you could have just hold it on to your position, or you could have marked any optimum trade entry zone where the market would come and mitigate this optimum trade entry. But here you can see the market is very much in a very discount area where you could expect the market to come here and mitigate and move further high. But here, as the market sentiment was very bullish, the market came all the way to 50 levels. And if you try to plot the anchor VWAP level, guys, and see how the market anchor VWAP level helps in making decisions, you can see here the price is forming support. Here you can see price is forming support. And if you try to plot your anchor VWAP levels, you can see here the market is rejecting price from these levels and continuing further bullish. So you could have taken long position somewhere here also in case if you could have considered the market to be bullish. So this was one entry. After the 2.68 level where the market here rejected price from these levels, and if you look into higher time frame and see here how the market here behaved, this is the last up candle which broke structure towards the downside. So you can consider this to be an order block level. The market came and mitigated this 15 minutes order block. So you can see you could have targeted the order block level as well. Clearly, once the order block has been mitigated, it doesn't hold any value, guys. So you could have taken it out, and just for target levels, you could have considered the order block level. But what you need to see is the swing low to swing high of here, the last down candle, the common point between this to the last up candle. And you can mark the optimum trade entry zone over here, where you could have expected the market to come here. This is the optimum trade entry, guys, the 0.70 to 0.78, which is clearly indicating some sort of bullishness. And what we need to see is that if this optimum trade entry level is in confluence with the fair value gap over here, definitely you can see this is in confluence with the fair value gap over here. The optimum trade entry and the fair value gap clearly both are in confluence. And what you could have seen is to draw the fib extinction levels once the optimum trade entry has been mitigated, and you could have targeted towards the upside. So in case if you try to plot the fib extinction levels, the common point between this to the common point between this to the common point in this, what you could have targeted is that you could have targeted the 3.6 level over here, or you can see the market came all the way to 4.26 level. You can see, guys, you could have targeted it all the way to this zone over here. You can see this multiple rejection, or as long as the market is moving above the 9 as well as the 21 moving average, here is where the market broke the 21 moving average towards the downside. So in case it could have easily targeted the 3.61 level also, you can see this was the best entry, best exit where you could have taken. So keeping your stop loss just below that optimum trade entry candle itself, guys, where the market again broke this 200 moving average towards the upside, and keeping your stop loss just below that candle itself, you could have targeted it all the way to this level over here. So in my previous Bitcoin trade analysis, when the market was trading here, I told you to enter long position even though the market was overextended. There is a high chance the market might continue further higher. So what I have told you is that in case if the market sentiment is very bullish, you could have expect the market to reach these levels. If you go and watch my videos, you can see that these are the target levels which I have marked you, and you can see the market reaching all these target levels and rejecting price from these levels. And I told you, mark you these target levels, guys. In case if you go and watch my previous video, I told you that definitely the market is going to reach this 758 levels, or the swing highs over there. And you can see in a 5-minute time frame, the market came all the way to this 3.6 level, where you could have expected the market to reject here, reject price over there. And in a smaller time frame, you can see what happened here is that this aggressive selling towards the downside, guys, where the market clearly formed a chalk over here. This is an internal chalk formation, and you can consider this to be an high resistance liquidity zone because the market swept the swing highs. You can see even this swing high and swing high over here, swept this high, closed between this range and formed a chalk over here. And this momentum is clearly very significant because the market not just made a low resistance liquidity run, but the market sweeping these high resistance levels and rejecting price from these levels and the liquidity run over here. This momentum is very significant. And what you can see is that in case if you plot the fib levels over here, the common point, the high to low of this candle, you can see the market at 550 levels is in confluence with fair value gap as well. So this is the 550 level, guys. So, and this is in confluence with the fair value gap over here. You can see the market mitigating this fair value gap as well. So what you could have done is that after this fair value gap mitigating, you could have easily entered short position here, keeping your stop loss just above that candle itself, or this candle itself, guys, and targeting it all the way towards the 200 moving average. Or in case if you try to plot the fib extinction levels, the high of this candle to the low of this candle to the high of this candle, you could have targeted the 1.68 level over here. You can see this is the 1.68 level, guys, where you could have targeted it. So, or the 200 moving average in a 1 minute time frame is where you could have expected the market to reject price and continue further towards the upside. And the last up candle before the down move, you can consider this. And the market came and mitigated this order block level. And once the order block has been mitigated, it doesn't hold any value. But here, the market failed to make a lower low, even though the market came all the way to this order block level, mitigated this order block, but failed to make a lower low. Instead, the market broke structure towards the upside and even closed above this zone over here. You can see, guys, clearly the market signifying some sort of bullishness. In case if the market sentiment would have been bearish, the market would have further after this kind of momentum towards the downside noise. You can see the aggressive selling, the market mitigating this order block, or you could have expected the market rejecting price from 50 levels over here or anywhere along these levels or the optimum trade entry which is located here. But here you can see the market came all the way to this order block levels and showing a huge rejection candles over here. But market failed to make a lower low, and you can see 200 moving average support over here. Instead, the market broke structure towards the upside, clearly indicating some sort of bullishness. And you can see the market here showed some bullish momentum, broke this level as well. And the market, if you consider this common point between this to the common point between this, you can see the market rejecting price from optimum trade entry zones over here. But here the market is already mitigated, guys. But again, the market came all the way, mitigated these levels. But you can see after this momentum towards the downside and the market breaking the 9 as well as the 21 moving average towards the upside and closing above these levels. Or here, you could have entered long position, keeping your stop loss just below that candle itself. And for target levels, what you could have done is to plot this web extension levels, the common point between this to the common point between this to the common point between this. So you could have targeted the 1.68 level over here. This would have been a short scalp, guys. For better confirmation, you could have entered after this kind of bullish candle, or even after this bullish candle is where you could have entered, keeping your stop loss just below that candle itself and targeting it all the way to 1.68 level. This was one scalp where you could have just taken. And you can see clearly the market here broke the structure high over here, indicating a clear break of structure. And you can consider this to be a demand zone over here, a strong a demand zone or the order block level. So you can consider this to be a order block level. But you can see here the market failed this order block level. And you know why this market level has failed this 5-minute order block? Because you could have expected the market over here. This is a clear 5-minute order block where the market came this level, broke structure towards the upside. Here the market didn't respect this level is only because, guys, this was in a very low resistance liquidity zone. You can see the market failed to sweep this low or even sweep this low and closed between this range. And even though the market sentiment would have been bullish, you could have expected the market after reaching this order block level, rejecting price from these levels, if chalk formation and further continuation of price towards the downside. But you can see the market came all the way to this liquidity, or what you can see in a higher time frame, the fair value gaps, guys. You can see here there is a fair value gap over here. So this was the first fair value gap. So you can expect market to mitigate this fair value gap and continue further bullish towards the upside. So the market came all the way to this low over here, mitigating this fair value gap. But what you can see here is that the market here broke structure towards the downside, a clear break of structure is, or you can consider the chalk formation. Market always moves in a phase like the expansion phase. Consolidation and expansion is what usually market behaves. But definitely here the market manipulated all those buyers who might have entered after seeing this consolidation. A lot of buyers might have expected the market after consolidating would definitely break structure towards the upside. But here what happened is that the market manipulated all those buyers who might have entered here, expecting the market to go further towards the upside. Since the market here showed a very good bullish momentum, and the market consolidated in a sideways manner. And you can see, if you consider this common point between this, if you see the order block levels, guys, the common point between this to the common point between this, you can see market is trading about the 0.38 level, clearly signifying a lot of bullishness. So there is a very good chance that the market might continue further aggressively towards the upside. But what happened here is that the market, instead of breaking this high, guys, you can see, in case if you could have considered bullish momentum, you could have waited for chalk formation and the market retesting the order block levels or chalk levels. But here what happened is the market broke structure towards the downside, clearly indicating some sort of bearishness. And if you consider this swing high to swing low over here, and what you can see is that here the market rejecting price from 0.38 level over here. This is the 0.38 level. and market breaking structure towards the downside, and the market is trading below the 9 as well as the 21 moving average as well as the 0.38 level price rejection. So in case if you try to plot the anchor react level here, you can see the market here is clearly bearish. So what you could have entered is to enter at this position, guys, the Fib extinction levels, the common point in this to the common point in this. After this kind of bearish rejection of price, you could have easily entered here, keeping your stop loss just above that candle itself. And for target levels, you could have targeted it all the way to this 2.6 level over here. Or you can see the market came all the way to this fair value gap over here, mitigation and rejecting price from this level. So this is where you could have exited. The order block level has been clearly failed, guys. In case if this order block level would have been a very good or strong order block is then when you could have marked the optimum trade entry zone over here. So if you mark the swing low to the swing component in this, you can see there is an optimum trade entry over here where the market here is showing a fair value gap or imbalance candle. So you could have expected that the market would come here to this optimum trade entry, rejecting price from these levels and closing above these levels. And again, the market retracing this retracing to this demand over here and further continuing bullish size. This is how usually behaves, but definitely this candle over here as well as this candle is where which clearly showed that the market sentiment is bearish. In case if you have missed out on this trade also, it's fine, guys, but definitely if you could have taken trade over here expecting the market to go further bullish momentum, you could have be cautious about whether you need to take your trade or what. You can see even this 200 moving average was being broken towards the downside. This was only because of this impulsive momentum. The market has left out some fair value gap or imbalance over here. That's why the market came and mitigated this fair value gap and continued further bullish momentum. But after the price reached all the way to these levels, the market showed some sort of rejection and the market headed higher. So what we could have marked is to mark the swing low here, the swing high over here, and swing low over here. In case if the market would have been bearish, the market would have broke these levels and continue further selling towards the downside. But instead, the market broke structure towards the upside, clearly indicating some sort of bullishness. And you can consider this swing high to be a stock formation. And after this stock formation, you could have waited for retracement, guys. And what you could have waited is to mark the swing low of this candle to the swing high of here. And you could have marked the optimum trade entry. And you can see the optimum trade entry is in confluence with the fair value gap over here. So this is the optimum trade entry, guys, where you could have marked this optimum trade entry zone over here. And you could have expected the market to come here, but here you can see a huge rejection of candle over here from this optimum trade entry, and you can see how strong the demand is. So a lot of buyers might have entered after seeing this kind of rejection, keeping your stop loss just below this candle and expecting the market to go further bullish. But you can see again the market came and targeted all those buyers who might have entered seeing this kind of rejection of price from this optimum trade entry zone. So the market came and mitigated, but here the market, after mitigating this order block levels, you can see the market. But here you can see this kind of impulsive and momentum towards the downside where market failed to make a lower low. Instead, the market continued further bullish towards the upside. And you can see here the market broke structure towards the upside, a clear break of structure. And the market came and again mitigated this 5-minute order block over here with fair value gap. And you can see this kind of rejection candles over here, clearly signifying some sort of bullishness. So this was the first trade setup where you could have taken. So if you try to plot the Fib extinction levels of these levels, the common point in this to the common point within this to the common point in this, the first target would have been this 100% move over here, the next 1.68 level. So you could have targeted it all the way to 2.6 level over here, guys. You can see this is the 2.61 level, and this is on Tuesday, the next day, guys. So keeping your entry over here, guys, this is where you could have entered, keeping your stop loss just below that candle itself and targeting it all the way to 2.6 level. You can see how the momentum here has behaved. The market sweeping this sectional liquidity formed a chalk. You could have expected some kind of retracement because of this huge impulsive momentum. So you could expect the market to come to 0.38 level or the 50 levels after this kind of rejection of price from overextended towards the upside. So this was one scalp where you could have taken. This was another momentum trade. This was another momentum trade, guys. I hope you're understanding, guys. In case if you find my videos helpful, guys, please like, share and comment. Share with your friends and family as well. And keep supporting my channel, guys. Instagram is a way to go. So in case if you want to message me, you can message me over there. I would be glad to respond to you guys. Thank you.